If you are a former client of TD Ameritrade or TD Ameritrade Institutional and your accounts transferred over as of Labor Day this year, and you're currently taking automatic monthly distributions from your Schwab retirement account, then you'll want to watch this video. So as of Labor Day 2023, all TD Ameritrade and TD Ameritrade institutional accounts no longer exist. They've been transferred over to Schwab. I've covered that in other videos and some of the pros and cons of that. But one thing we recently discovered is that many of our clients are currently taking monthly distributions from their former TD, now Schwab retirement accounts. And that was set up on VEO1. And with VEO1, TD Ameritrade's system, these deposits were being scheduled normally at the beginning of the month, let's say the first business day of the month for a client. And if the first business day of that month happened to fall on a weekend or a holiday, then that distribution was deferred until the next business day. So it is a little annoying, or was annoying for clients, because sometimes they weren't getting their money on the first, but they were still getting their money shortly thereafter. Well, with Schwab, they have a different system. And if you put an effective date of the first of the month, and that first of the month happens to fall on a holiday or a weekend, Schwab actually does the opposite. They push up the distribution date. So they would have you get your money maybe, let's say, on the 29th or the 30th. Pros and cons with that system too. But the big problem is with merging these two systems into one. So with clients who are normally getting their distributions on, let's say, the first of the month with TD Ameritrade, now Schwab is having those come out before the first of the month. And with the end of the year falling on a weekend, it's possible that if you were getting monthly distributions from Schwab or from TD, and now they're coming out through Schwab, that those you might get an extra distribution. So it's something that we discovered for our clients, and for some clients it won't be a problem. If this additional income, let's say monthly income, isn't going to cause any tax issues for them, then they'll get an extra paycheck. But for a lot of clients, there are tax issues to consider, such as, would this cause you to be in a higher tax bracket? Maybe you don't want this extra distribution, or maybe this will cause you to have to pay more money for Social Security if you're someone who's retired. Or maybe you just don't want this additional money because any money you take out of your retirement accounts is taxable. So if you are in this situation where you have this monthly money coming out, what do you need to do? Well, if you're working with a financial advisor, hopefully they've reached out to you. If not, you should reach out to them, letting them know that you might be getting this extra payment and you probably don't want it, so they can take action steps to push out the effective date just for that January payment, so it doesn't trigger an additional payment coming out to you in the end of December rather than being at the beginning of January. Additionally, if you do things yourself, then you definitely want to reach out to Schwab directly to see how you can change the effective date of this payment. Now, if you're someone who's scheduled automatic RMDs, which some firms do allow, and maybe you've done this previously, depending on your setup with Schwab, or I should say with TD, then you want to reach out to Schwab and find out if this is going to trigger two RMDs. Let's say you already took out your RMD for 2023 and you scheduled an automated RMD with TD to come out at the beginning of the year. Well, if that effective date was January 1, then you might end up getting an additional RMD in 2023, which would then cause you to have more income and also wouldn't satisfy your RMD for 2024. So that's why it's important that you talk to your advisor if you're working with an advisor with Schwab, or you reach out directly to Schwab to find out, if you were a former client of TD, what your effective date is, and if this is potentially going to cause you to have extra income that you don't need. And after we get past the beginning of the year, then you could readjust your effective date, but you still want to make sure that you're not going to trigger extra distributions into next year, because it probably will take a little bit of time for Schwab to either change their system or for you to make sure that you have a handle on it. Thanks for watching.